John McCagg here for libertyAidAcademy.org. Okay. Hey, you got this McCagg Mastery Trust. It's a non taxable trust. There are a whole bunch of benefits, and there are financial benefits. Not just all these other amazing benefits, but a long list of financial benefits. So you're like, okay, if I invest, if I invest 1997 in your course, what's my return on investment, right? How am I going to get paid after this? What I wanted to show with this video is this is the absolute best return on investment you can put your money into anything. Nothing's going to earn you a ROI, return on investment, like this. Nothing. You're not going to be able to come up with anything. Return on investment. Oh, it's pretty. Let's look at this. Net income divided by average total assets. Okay, that's harder to say. Operating income divided by average operating assets. Okay. Uh, it's kind of a hard thing to understand. Even this thing for dummies, it's like, okay, but what it means is, okay, let's say I put $1,000 into something, and in a year, if I get $1,000 and seven, at that $1,070, at the end of that year, you would have gotten a 7% return on your $1,000. Okay. So that's how it works. You get your $1,000 back plus $70 end of the year. That's what's called 7% return on investment. Okay. If you look it up, it's actually hard to understand, but it's pretty simple, you know. So you spent money in, you get your money back plus some extra money. That's what it means. And so, oh, how much extra money did I get back? Okay, that's a percentage of how much you put in. You see, and so it's like, oh, okay, wow, one of these is, so what percent do you get on a return? A lot of, some like the bank accounts has less 1% on a bank account for per annual for the year. Okay, so 7% would be like, whoa, that's decent, you know. But what's better is what we got going on here, and that is what I did was I filled out an Excel sheet here, and it gives you the return on investment. So trust annual return on investment calculation. Here's your investment. Here's your initial investment, 1997. Okay, yeah, sweet. Okay, and there's super many financial benefits, and I don't know which one you're going to qualify for, but I know which one everybody's going to qualify for, this top one. And then other ones you can add in, and I've given you the methodology here to see how much your return is going to be, how much money you get back. Like, oh, I made 10% on that. Oh, that's sweet, 10%, meaning, okay, that's an annualized return on your investment at 10%. Oh, that's high. Wait, nice, you know. So let's go through this now. The way that I worked out this spreadsheet here. Okay, this is what you put in. All right, and then one of the benefits you get out of having this trust is you can get an EBT, SNAP, food stamp card, whatever you want to call it. Right, those are all names. Every state has it, and it's $234 a month for one individual. So this here, this formula is $234 times 12. That's okay, 2,208, $2,808. Okay, cool. So that means in the first year, right? Just this one thing. So you got your 1997 back plus, right? Uh, $811. What? Sweet. That's fantastic, right? Because if you and that's what we do in this formula here. We take, oh, B6 is like 6, right? Okay, what we do is we take, oh, 2,800 minus this, right? That's like $800. And then we do the ROI calculation. We divide it by how much we put in. 1997, that's A4 here. Okay. Boop, boop. So let's just do it in numbers, right? $2,808 minus 1997. Oh, like I said, that's $811. Great. And then you divide that by 1997. And what do you get as an annualized return? 41% return on your investment for year one. Okay, that's a pretty sweet deal. But it gets better, because year two, you already got your money back. Pow! So it's 100. You got 100% of your original investment and 41%, right? Because you already got your 1997 back. So in the coming years, you just get returns. So that it's 141% in year two. Year three is 141, 141, 141. And then, so I could have put these, this on top and this beneath, but okay, 5 years is $2,808. This is a 5 year total. $14,000 you made at 5 years just from an EBT card, from having a trust. One thing. And so a 5 year annualized ROI is the average of these 141s for 4 years and 41 basically. But, there's a calculation to work it out. Here it is. And 121% return on investment, annual return. So every year you're averaging earning 121% on your investment just from getting the EBT card. And that's just for one individual. Think if you had, we got a trust, thanks for the course, 2 people on EBT. So what you will want to do for that is change this here to 234 times 2 times 12, right? Because, and it'd be in parentheses, equals, parentheses, 234 times 12, parentheses, then another times 12. Okay? Because, 234 times 2, then times 12, right? Because, twice as much money, because it's 2 of you. So, whatever that is, 2,800, so it's 5,400, 5,500, something like that, right? $5,600. So, it'd be double, it'd be more. But so we're doing this as just one individual gets a trust and they qualify for EBT, boom. And so this is your return on investment on that. Now, okay, let's do another example. Everyone's going to qualify for EBT. Sweet. So again, now we're going to do a couple things added together, okay? Because if you have income tax, you're not going to pay it no more. Property tax, you're not going to pay it no more. Other benefits you could get, right? Like I said, multiple EBT, that goes up. Medicaid goes up. Get some PPP, EIDL, it goes up. Credit card points, it goes up. Remove sales tax, that goes up. You don't get garnished anymore, so that means your return never goes down. No seizure of your assets in the trust, so your returns never go down. You get these returns. They can only improve. Maybe SNAP or EBT gives more every month, and so these returns improve. As student loans, you don't have to pay your student loans, right? Do the video on that, and your credit's perfect. If you're operating a trust, it's like, I have no money, So your person, that your corporation known as the person, you run trust, you run your corporation, put everything in the trust, so no reporting taxes, no paying taxes, and then it's like, the person has nothing, so it qualifies to get these benefits. That's all. Gaming the system, sure, but I didn't create the system, and neither do you, and we got to put a roof over our heads and feed our families and so on. So play by the rules, follow the law, get the maximum benefits. This is completely legal to do. It's stupid not to get as much money as possible, because then you got to work harder. And this is simple. Okay, so let's do our next calculation. Let's say you were to get, I don't have to pay $2,000 in income tax. Great. So we put $2,000 here. Okay, how much do you save in income tax? You could put in that amount there. You see, say, I saved $10,000. Okay, so that'd be more. I saved zero. I don't get it. I wasn't paying income tax anyway. Okay, fine. a zero. You're still making 41% on that EBT, so whatever. Everyone is still the best investment just with that one part. Okay, so let's say you go through the property tax thing. Oh, hey, I saved I don't know. I saved 15,000 on property tax. I saved 1,500. I saved 500. I don't know, whatever. But I put in 1,500 for this calculation. Okay, so what you got to figure is everyone's going to get the EBT. So I got income tax too. Okay, so what's your ROI if you got the benefit of getting an EBT and the benefit of I don't have to pay or report $2,000. Sweet. That would give you an annualized return in the first year if you had these two items, right? EBT plus income tax. So income tax and EBT, right? It's 2,000 plus those. Okay, so it's plus. So your calculation adds them together and then subtracts out your original investment and divides by your original investment. Oh, that's 141% in your first year if you got both of those benefits. And so, let's say, and so if you got more or less, you would just change this amount. Okay. So property tax, let's say, my property tax on this real estate is $1,500. The trust saved me that, so I add that in too. Oh, you got these three benefits? Sweet. Then in your first year, and this was the amount of those benefits, right? Your first year return on investment is 216%. Okay, and then of course this gets better in year two, and year three, and 241% if you got these two benefits in year two. And then in year three, if you got all three, and these were your numbers, it'd be 316% return on investment. So let's say, and this is just, this isn't a generous in any way calculation of what you're going to save, right? This is just basic. Everyone gets this first one. Could be double, could be triple, whole family. I don't know. So, but what we're going to do is these would be 5-year annualized returns. Okay, so you got 41, 141. Okay, that's 121. 121%. If you got two of these benefits at this amount, your annualized return, so every year you would be getting a 220%, 21% return. And this is every year you get a 290, an average of 296%, because you get 216 and then you got 316. So it's an average of that you see over this 5 year. This is a calculation. Okay. But you could have all these other benefits. I don't have pay on student loans. Okay, well, you get that money back. So how much didn't you pay on student loans every month? How many hundreds times 12? Same type of calculation. You see, whatever this is, you would take all these items and other benefits you get. There are others too. I didn't list every single one, but I'm just trying to show you how you would calculate how much of a return you would get. This is an investment. I want to take this course. How much money do I get for taking your course? Yeah. Can you think of any college or any place, anywhere, where it teaches you a course and then in the future you get this kind of return? And this is just, benefits you get. You fill out an application and you get the benefits. It's not like you have to work hours at this or anything like that. You see what I'm saying? It's not like, I have to put in my 40 hours every week. No. You apply, you get the status, and that's it. You see what I'm saying? You receive these benefits. Just keep receiving them. You see? Okay. So, what could be easier than that? What could be better than that? What could be a better benefit? What would be a higher rate of return? These are, what you're going to find out is, in year 3, I was able to get this, and then I'd add it on. Year 4, I found this added. I got that, So it might be multi-years, but you can get that EBT from year 1. That's why I started the calculation with that. Look at this benefit. Okay, look at your return. Year 1, 41%. That's the absolute worst you could do, So, okay, ROI, how it's calculated, and the ROI you get from getting the McKeag Mastery Trust. Only trust out there that's no tax reporting, and it's copyrighted. I'm the one that come up with this. I posted my proof, everything works, so I'm fine, everyone's fine. No problem, no problems for anyone, never a problem for anyone, no one. And these are the type of returns you can get. No one could give you financial returns for any investment like this. None. Nothing legal. Nothing legal. Nothing legal could do this. Nothing. So you don't want to. Oh, you want to make more money? You immediately have to get this trust. If or else, what? Making money is not your thing. You see? If you just want to, this has so many other benefits. I have hundreds of videos on the benefits, but just straight money right away. Okay, it's a lot. It's excellent benefits. All right, looking forward to helping you out when you get the trust. It's easy. Get set up in one business day. It's a piece of cake. I talk about it, but pow, you get the info, go to the bank, set it up, you're open. So easy. All right, look forward to helping you. LibertyAidAcademy.org.